Welcome to the Asia Climate Finance Podcast, where we discuss climate action-related business, finance, and investment topics, including issues around clean, green, net zero emissions, and sustainable energy, as well as climate, environmental, green, and sustainable finance. Hello there, and welcome to the Asia Climate Finance Podcast. It's episode 32. I'm your host, Joseph Jacobelli. In this episode, we are talking about carbon exchanges. Now, carbon exchanges are an important component of sustainable finance as they enable the sale of carbon credits to reduce emissions. In this episode, we have Bill Pezos, who is the co-founder and co-CEO of the Air Carbon Exchange, or ACX, which won Environmental Finance's Best Carbon Exchange Award twice. The discussion starts with a general overview of the role of carbon exchanges and Bill's views on the current state of carbon markets and carbon trading. We then get into ACX's history, shareholders, stakeholders, operations, how carbon credits are organized on the platforms, and many other aspects. Please enjoy the show, and please note the disclaimer at the very end of the podcast. Hi, and welcome to episode 32 of the Asia Climate Finance Podcast. And as mentioned earlier, we have Bill. Bill, good morning. How are you?
Great. Thank you. And thanks again for inviting me.
Well, it's great that you made the time because I know you're running around quite a bit. So I really appreciate your time and I'm looking forward to hearing your insights. So as we usually start with the Asia Climate Finance Podcast, could you tell us a little bit about your journey overall and how you got to where you are today? Especially interesting is your very early involvement with carbon.
Sure. Well, I've been always in the finance markets. I started my career with what's now JP Morgan in New York City as a bond trader. I then went on to establish a hedge fund that specialized in trading fixed income sovereign debt. I sold out of that company in 98. And then I was banging around trying to look at what would happen for Bill 2.0. And I came across this thing called the Kyoto Protocol. So interestingly, the Kyoto Protocol established the beginnings of a global carbon market. And what carbon is, at its essence, is a financial instrument, right? And I was particularly well versed in doing sort of sourcing financial instruments in emerging markets and transacting them in developed economies. And that's exactly what the carbon markets were, right? So we were originating carbon credits in emerging markets like in India, in all the BRIC countries, and then transacting them in Europe because that was the biggest buyer. Established a company called EcoInvest, which became one of the largest aggregators of carbon credits during the first Kyoto era. Then for about 4 years, I was the global head of carbon origination and finance at Standard Bank. And then in 2012, I promised myself never to come back to the carbon markets. I spent a little stint with renewable energy, funding renewable energy projects in Asia. The reason I joke that I promised myself never to go back is the biggest problem with the carbon markets is that scarcity is a function of political will. And so it's very difficult for you to sort of pin your hopes, your career, and your livelihood on political will. And as we saw after the global financial crisis, political will around climate evaporated and the market collapsed basically to zero. So the resurgence of the capital of the carbon markets sort of brought me back. This is about 5 years ago. We were approached by the Singapore government to specifically Enterprise Singapore. We were approached by them to establish a digital carbon exchange in Singapore. We've been doing that for the past 5 years, and I'm happy to tell you a little bit more about ACX as we go forward.
That's really great. And given that you've been involved in carbon markets, carbon trading for a couple of decades, which makes you sound a lot older than you actually are. But
Pretty old.
do you have any advice for people who want to get into carbon markets and carbon trading?
Look, I think that it's actually pretty interesting because there's a chasm in the carbon markets between us sort of from the beginnings of the carbon markets and the very young and inexperienced. So in any financial market, you'll tend to have the entire gamut, right? People in their 20s, 30s, 40s, 50s, and 60s, and so on. In the carbon markets, there's this empty space in the middle. There are about a lot of young people, very smart, that don't have the experience of decades. And then there's a period of 10 years where a lot of people turn their backs to the carbon market. So I think that if you are looking to get into the carbon market, it's a great opportunity because there's huge demand. So and I wouldn't be very scared to delve into it, because at its essence, as I said earlier, carbon is a financial instrument. So if you're comfortable in the financial markets, you'll be comfortable in the carbon markets.
That was really, really interesting, Bill. We're going to talk about carbon markets, carbon exchanges, but it would be good if you could please put it first very briefly into context about what kind of carbon credits we will be discussing when we talk about carbon markets. Are we talking about regulated carbon market, voluntary one, everything?
Well, currently I operate within what's called the voluntary carbon markets, but I believe that differentiation between the voluntary carbon markets and the compliance markets is going to go the way of the buggy whip. The differentiation the line is going to blur and is already blurring, right? So if you look at Singapore, for example, they've announced a carbon tax, and you can pay part of your carbon tax using carbon credits from the voluntary carbon markets. So by definition, the voluntary carbon markets become not involuntary in Singapore. And you're seeing the same thing happening in several other jurisdictions, right? So even in the UAE, where we have operations, there's active discussions in government to set up a localized carbon market. So you'll see it's existing already in Colombia, in South Africa, as I said, Singapore, Indonesia, India, Brazil. Every single one of these countries is looking at using the carbon markets as a way to mitigate their carbon exposure globally.
We discussed carbon as a financing tool and carbon trading in general in a couple of episodes before, episode 17 and episode 27. But could we have your personal take on the current state of carbon finance in the world in general and in Asia in particular? Is the amount growing? Is the expertise and understanding growing? Is acceptance of carbon finance as a form of financing also growing?
I think it is. It is. Although I don't want to say that carbon finance has hit a pause in the last couple of months, but it's definitely taken a bit of a breath, let's say. It's trying to get its thoughts organized, if you will. So there's still a lot of investment in carbon projects. There are there are corporates that are looking for opportunity. But what's happened in the very sort of last year and a half, which is interesting, is that we had the Paris Accords, we had the meetings in Glasgow, and then we had a series of decisions and quotes for what's called Article 6 of the Paris Accords, which basically puts the framework around global trading of carbon credits on a bilateral basis and a multilateral basis globally. But none of the details were actually fleshed out.
Mm.
So I believe that insecurity in the market as to what are our guidelines, what are our guardrails, has the market a little bit confused and a little bit on its back heels. So it's a period of transition. I still think that the general direction is very positive, but it's not a straight line. Right now, I believe there's just a lot of uncertainty. The other issue in the market is that there's been a lot of discussion about the integrity of the carbon markets, right? If you look at the ultimate buyers of carbon credits globally, they are sustainability officers deploying marketing dollars, right? So every purchase that's done by a company of carbon credits, which will eventually be retired, and then they can announce that they have reduced that amount of carbon, comes with significant reputational risk. And so when the landscape is so uncertain, and then on top of that, every decision has reputational risk, corporates are very reticent to move very quickly. And so, those gray areas in the carbon markets today have sort of slowed the growth. I think there was we were very quick off the block maybe 2 years ago. And now people are taking stock and slowing down. But I think the general trend is up.
As a key protagonist in the carbon trading and carbon markets is carbon exchanges, or are carbon exchanges. Could you please very simply explain how an exchange actually works? And I'm really sorry about the very simplistic question, but for those of us who are not in the know, how is it different, for example, from a securities or stock exchange, for example?
Well, there are a couple of nuances in the carbon markets which make it very unique. One is that everywhere other than the UAE, carbon is actually considered an intangible commodity, and as such, it's an unregulated commodity. That's pretty bizarre because it's a relatively big market. It's going to be a ubiquitous financial product in the near future. But as of now, it's an unregulated asset class. And what that means is that literally you and I could start a carbon exchange in pretty much any country that we want. So we could create a marketplace to transact carbon in pretty much any country globally. We have taken the choice of establishing ourselves in Abu Dhabi and being a fully regulated exchange, fully regulated clearinghouse. The reason for that is that we want to unlock the benefits of a regulated asset class, right? When you have a regulated asset class, you have a regulator that's creating price transparency, that's ensuring that the people that you're transacting with are operating honorably, they're not front running you, etc. So in bringing back to the essence of your question, what a carbon exchange is, it's just a marketplace where buyers and sellers can meet. Because prior to the advent of exchanges within the carbon markets operated on an over-the-counter or OTC basis. And what that does is it eliminates price transparency, right? So what we found, I wrote an article many years ago and it was titled "The Great Climate Heist." And really what's happening in the carbon markets prior to exchanges is that transactions were operated on a project by project basis, and there was no real price signal. And so brokers were taking as much as 50 or 100% commissions on doing transactions. And that's money that's being hijacked that could be put into climate mitigation, but instead is being taken away by brokers.
Great. Actually, back in the late 2010s, when I was at CLP Holdings, one of the things I had to do was to sell the CRs out of India, out of China. and there was a lot of work trying to establish, the buyers, and there was no pricing benchmark. So, well, there was kind of like, in Europe, but it was very, very, it was not easy. It would be a much easier job now. Now, I wanted to, and I'm really excited about this because we can talk about exchanges for real as opposed to just in theory. So you, a CEO, co-CEO, and co-founder of Air Carbon Exchange, or ACX. So I'm gonna ask you a little bit of questions on that so that people can use that as a case study, or I should say best practice or gold standard as far as I'm concerned. So ACX has been described as the easiest and most streamlined platform. I picked up somewhere on the web, and also described as the number one platform in the world. And it's great to be able to talk a little bit more in depth about ACX to better understand important roles of carbon exchange play. What is the background of ACX, and how did the idea come up, and how long before it was launched? I mean, you did mention that 5 years ago you launched it, but could you give us a little bit of a background on how the idea came up and how long before it was launched?
Well, ACX really, it was a conversation that my partner Tom McMahon and I had with Enterprise Singapore many, many years ago, about 5 years ago now. And the question really was, could we build a digital carbon exchange in Singapore? There was already a push 5 years ago in Singapore to orchestrate and look at carbon, creating in Singapore a carbon hub. We're seeing now that Singapore has really taken a front seat in terms of creating a carbon hub. But that conversation was very interesting, and I think it was what came to become ACX is actually very much part of the DNA of the people that were in the conversation, right? So my partner Tom I like to think of him as an exchange architect. He was on the board of NYMEX, and he's built over his career several commodity exchanges. And then my background, as I told you, is heavily in the carbon markets, but always within financial institutions and looking at things from a finance standpoint. And so together we sort of thought, we zeroed in on a very simple concept, which was to bring traditional commodities architecture to the carbon markets. That sits at the essence of what we're doing. And people always ask me, where do I think the carbon markets are going? And I said, well, just look at another commodity market and how did it develop, right? Mm-hmm. And I believe very firmly that that's how things are going to develop. So ACX is really no different in that sense. What we looked at was, I always use soybeans as an example. No one's buying trucks of soybeans one at a time. What people are doing is that the soybeans sit in a warehouse, and what's transacted are receipts that point to those to the soybeans. And when people purchase those receipts, they know exactly what they're getting. They're not worried that they could receive something else. And so we wanted to create that same ecosystem for the carbon markets, And what it will do and what it does is it unlocks a lot of things that we take for granted in other commodities that actually don't exist today in the carbon markets, right? So, if you're a farmer, you can plant in the spring and be confident about your decision to plant in the spring because you can hedge yourself. The banks can finance your seeds. You can pre-sell stuff. You can, there's just a myriad of financial instruments that reduce the risk of taking that decision in the spring. In the carbon markets, we're still not there, right? Because we're still trying to establish that very, very clear and transparent price signal. But when that happens, it will unlock all of the other things that are necessary for a market to progress. Right. So we will then be able to sell carbon forward, hedge ourselves. We'll do all kinds of stuff that we take for granted in other markets. So that's at its core, that's what ACX is. We've created trusts Each trust has a specification, right? So, for example, there's a market called CORSIA, which stands for Carbon Offset Reduction Scheme for International Aviation. So that's in very simplistic terms. Those are carbon credits that the airline industry has deemed can be used in order to meet their climate goals. And so when you buy a CORSIA eligible ton on our platform, a CET, you buy that receipt, you are guaranteed that you will receive a carbon credit that meets that specification. But you no longer have to have that conversation about the underlying project. Has it been issued? Who did it? What's the carbon project, et cetera, right? And so but if you look at our market, only about 15% of all the traded carbon on ACX is traded on a contract basis. The balance is traded on a project by project basis, right? So we just have to wait for the market to become more and more comfortable with trading on a securitized basis, if you will. And I just think that's inevitable. It will happen. But for now, we need to wait.
When we spoke before, you mentioned that you created a Singapore one, there's a UAE one, and there's some others out there. Could you explain a little bit the rationale behind that? Why isn't it global?
Yeah.
Don't you have a single one that is global?
Well, I think what's interesting about the carbon markets, and this is sort of an unintended consequence of the Paris Accords, right? So as a result of the Paris Accords, every country basically has agreed to sit around the table once a year and look each other in the eye and report on their carbon footprint, right? And what this has done is it has awakened the realization that really this is an asset where a country may have a liability, but more importantly, where a country may have tax revenue coming from, right? It's a national asset. Carbon is a national asset because very simplistically, if you and I found a tract of forest in Indonesia, we could previously get it registered in Geneva with Gold Standard. Gold Standard would issue us carbon credits in Geneva, and we would sell those carbon credits, let's say, to a German corporate, and the Indonesian government would have no record of that transaction, right? So an unintended consequence of the Paris Accords, as I always say, is that every country in the world wants their own carbon exchange. They call it an exchange, but really what they want is for that first transaction to be a transaction that occurs within their borders in order for them to understand and get a grasp or even tax the transaction. And Indonesia has stipulated that, and several other countries are following suit. What helps us in this? So the idea that what we're creating is a distributed network of exchanges. We own our entire technology stack. We are probably the only company in the world that has developed a purpose-made exchange infrastructure sitting on blockchain. It's not crypto. It's just we use the best attributes of blockchain in order to create security across transactions and speed of settlement. ACX owns its own technology stack. We built it from the ground up. It's purpose-made, and as such, we can enter into any one of these countries and offer them a fully operational carbon exchange within a very short window. So not only is it a technology that allows for the trading of carbon credits, but we connect a central order book. So today we have operations in Brazil, in Singapore, and in Abu Dhabi. By the end of the year, the total will be 7 at the very least. And each one of these exchanges share a common order book. What that means is if a carbon credit is up for sale in Brazil, it shows up in all the other exchanges and vice versa. Today, we have about 250 companies from 31 countries on the platform. So once we enter into a country, not only are we giving them the infrastructure, all of the connectivity to the carbon registries, but we're also they hit the ground running in terms of access to buyers and sellers globally. And so that's our key strategy. We're creating a distributed network of exchanges with a central order book within a fully regulated climate.
I used to be an equity analyst, and now I'm kind of like an investment manager, so I love numbers. Could you give us a few more statistics about ACX, please? Like you mentioned, I think the number of participants is about 250 companies right now. What about number of shareholders, maybe value traded, just to give people a little bit of context?
Sure. Yeah, so we have a total of 279 companies, actually, of which 200 are fully onboarded in Singapore, and the other ones are onboarding in Abu Dhabi, which is launching now in May. Our largest shareholder currently is Mubadala, which is the sovereign wealth fund of Abu Dhabi. Our second largest institutional shareholder, is Deutsche Börse, which is the German stock exchange. So those are our two sort of anchor institutional shareholders. We have traded somewhere around 20 million tons of carbon, which is not particularly a massive amount, but it does put us in a league of our own. For the last 2 years, we have won the world's best carbon exchange award, which is given by Environmental Finance,
right.
and that's an award that's given on a vote basis by market players. So it's something that we are very, very proud of.
Can I ask us, amongst the silly questions, another silly question, and I'm not sure if this is sensitive or not, but how does a carbon exchange actually get paid? Does it charge a levy on each transaction like a stock exchange, or is there?
It's exactly like a stock exchange with some kinks in it. So as I said, there's two ways of trading on the platform. You can trade on a project by project basis, or you can trade on a contract basis. On a contract basis, we are the lowest priced infrastructure that you could possibly tap into. We charge $5 per 1,000 tons traded, right? So that's significantly less than 1%, maybe as much as less than 0.5%. That makes us the cheapest platform globally for you to transact carbon. On a project by project basis, again, I believe this is the lowest in the market. We try and maintain that. On a project by project basis, we're looking at 2.5% aside of notional. That compares with, I think the next platform out there charges as much as 7%. So we're significantly below that. And the reason for that difference is that on a project by project basis, there is a lot more work and heavy lifting that has to be done by the exchange. So we have to make sure, we have to give all of the information of the underlying project to the buyer. We give all of the information to the seller. And when a transaction happens on an exchange, one of the main things that exchanges do is they eliminate transaction and settlement risk, right? So we, as an exchange, actually buy the credits from the seller and then sell the credits to the buyer. So we sit in the middle of every transaction. So when it trades on a contract basis, it's very simple because it's a push of a button and it happens on chain and there's no risk in the transaction. But when it happens on a project basis, then our back office has to get involved, and there's a lot more sort of moving parts. So that's basically how we make money. The other revenue source for exchanges is data. We live in a data intensive world, and by being a marketplace where transactions happen, we accumulate a lot of data, and there's significant interest from data companies to buy that data from us. So that's another source of revenue. The other source of revenue is just plain clearing, right? So there may be two parties that one bought carbon from party A, bought carbon from party B, but they may not have done full KYC on each other. And so they may be fully KYC members of the exchange, and so they agree to settle the trade on exchange. So they then basically bring the trade onto our platform. They say, hey, I bought from party A. The other one says, I bought from party B. Can you settle the trade for us? And so we do that for a small fee as well. That eliminates the risk of settlement risk completely, and it streamlines operations.
Talking about the way that the credits are organized, you mentioned earlier Corsia, and I think I saw on a website there's also something called the Air Carbon Global Nature Ton series, the Air Carbon Renewable Energy Ton. Could you explain why you do this and how it works very briefly?
Yeah. Well, if you look at the markets in general, again, let's go back to traditional commodities, right? If you look at soybeans, you have on one end you have farmers, right, and on the other end you have food companies. So in the carbon markets, that the equivalent would be project developers, people that are investing in projects to generate carbon credits, and then on the other end you have corporates that are looking to buy credits for retirement, right? So those are the buyers and the ultimate sellers, the initial sellers and the ultimate buyers. And if you look at the soybean market, those farmers and food companies, they may represent 10 to 15% of all the trading that happens in the platform, right? In the world, actually. The lion's share of trading are liquidity providers, hedge funds, speculators, et cetera. And by having that huge amount of financial trading in the underlying commodity is when you can unlock all of this financial instruments that we spoke about earlier on. In the carbon markets, it's flipped around, right? 80%, more than 80% of the market is all project by project basis between buyer and seller, with some brokers in between. That speculative component doesn't exist, and the reason it doesn't exist is because for you to unlock that speculative capital, you have to have certain things. You have to have liquidity, and you have to have price transparency. So that, if you have a fund that has, that's managing $1 billion, they know that they should go long carbon because they know we're all moving into a carbon constrained world. But when they look at the market, they go, well, okay, my bylaws say I can invest in commodities, but I must be able to mark to market on a daily basis. Is there a clear price signal? Right? If you're buying on a project by project basis, that's not possible. Right? So we create this contract, right? So the first contract we created was a GNT, which in this case is not a gin and tonic, but is a global nature ton, right? So if you are one of these speculative dollars that are sitting on the sidelines and you want to go long the carbon asset class, right? You're not so interested in any particular project, right? You just want to go long the asset class. Then you come onto ACX, you buy a GNT, and you're long carbon, right? And the GNT, the specification of the GNT is global nature. So these are carbon projects that are generated by forestry projects on a global basis. So we're launching this other contract called an ANT, which is an American nature ton, right? So these are forestry projects that generate carbon credits in North America, right? So now if you want to go long carbon from forestry in North America, you just go in and buy an ANT. So you don't have to focus on the minutia. You're just taking a position on the market as a whole. That's the reason for creating these contracts, right? The CET, the CORSIA eligible ton, that gives you exposure to the aviation business. So when COVID hit, all of the aviation industry basically no longer was a buyer of carbon credits, right? Because they were just trying to keep the doors open. So clearly the price of CETs fell because of COVID. Then the RECs stand for renewable energy credits. Those are the old CERs that we used to transact that you mentioned when you were with CLP, right? Those are still banging around, and they are really today the bottom of the barrel in terms of quality and actual value that's placed on them. But the reality is, if you look at the market, I believe the number is like 40% of all the credits that are retired on an annual basis come from those old CERs that we're talking about. What that tells you is that corporates are using those very low-priced, low-quality carbon credits to offset or to claim that they've offset their emissions. And that's the biggest integrity issue with the carbon markets today, that corporates are using very, very low quality, historical carbon credits to mitigate or to claim that they've mitigated their carbon footprints today. And so this idea of there being a problem with integrity in the carbon markets is really not so much a problem with the carbon markets, but with the corporates.
Although you said that right now we're in a kind of pondering period in terms of the growth of the carbon markets, this year alone, I think you had something like 4 major announcements, plus the fact that you're setting up a few more exchanges before the end of the year. Just to give a little bit of color on how things are developing with ACX, could you talk a little bit about some of these recent announcements, like your activities in Japan, for example, and the other three?
Sure. I think the way I look at this is, we're basically building the plumbing, right? So we're building all of the plumbing so that when the carbon markets start flowing, we will have all of the plumbing in place in order for carbon to transact efficiently. So, as I said earlier, that's what we're looking to do, right? So we have been expanding globally. I think if you would give me maybe another 2 months, I would be able to give you some very firm announcements in terms of the jurisdictions where we are, but as of now, I can only tell you what we have done.
Of course.
So we have already established an exchange in Brazil. The first deal in Brazil happened about a year ago, and it's a very important place for us. We have a very strong partnership there. I believe that they will account for at least 30% of all the carbon credits coming from forestry projects. And as the largest player in that market, we expect for that carbon to transact through us. We did a recent announcement in Japan. That's a bit of a think tank, if you will, that's really at the heart of the development of a carbon market, or the resurgence of the development of a carbon market in Japan. And so we're working closely with them in order to connect this future carbon market in Japan to our ecosystem. But as you know, Japan is a massive economy with many, many different players. And so we felt it made sense to have a very sort of broad relationship with an entity that was across many different companies, and not just do a joint venture with one particular company, because that in Japan could be could basically be the kiss of death. And then we did an announcement in Africa with the Nairobi Stock Exchange, as well as the Nairobi Financial Center. Again, Central Africa is a very important component of generating carbon credits, and so we're providing the ecosystem for them in order to transact those credits and bring those credits to market in the most efficient way possible. We have a couple of other ones that we will be announcing, and I'll make sure to reach out to you and let you know when that happens. But there should be another 4 markets from the 3 that we have, at least by the end of this year.
Like they say, watch that space.
Yes.
One last question about ACX per se, in two parts. One is, what do you see as the kind of very short-term and long-term challenges faced by ACX, apart from the obvious one, which is, the kind of overall policy framework, regulation, et cetera, is still evolving, and there's a lot of discussions going on right now. And secondly, in obviously a carbon exchange is totally different from, a crypto exchange. However, both are based on, distributed ledger technology, and some crypto exchanges have been hacked. So is cybersecurity a concern for ACX?
I'll do the cybersecurity question first. Look, I mean, there are players in the market that not only do they pursue financial gain, but they also just pursue chaos. And so as a fully regulated financial institution, we, that captures a lot of headlines, we're very much aware that we're a target, right? So we have a very robust system that ensures that we are safe. We're also, as I said, fully regulated. And so as a fully regulated entity, the level of oversight that comes from the financial services regulator in ADGM in Abu Dhabi is world class. And so we have to adhere to their standards. But one of the main problems with crypto exchanges is that they are transacting in crypto assets that can be taken off of the exchange, can be hijacked from one exchange, and basically disappear into the ether, right? You could steal Bitcoin from an exchange and literally put it in a thumb drive and walk down the street and then upload it again somewhere else, and nothing would happen. That's impossible within our ecosystem, right? So, JP Morgan is our clearing bank. We only operate in US dollars. So if you are transacting, buying or selling anything, you're actually sending US dollars to JP Morgan. They don't sit in some crypto wallet or anything like that. So on the cash side, it's very sort of traditional. And then on the asset side, we create these digital receipts to transact carbon within our ecosystem, but they cannot live outside of the exchange. Right. So it's not like a Bitcoin that you can take it off exchange and then upload it somewhere else. it is native. It is simply a digital receipt within our ecosystem. Outside of it, it's worthless, right? So we again very aware of being hacked, but I believe the risk is really just by bad players that want to create havoc, not so much players that are looking for financial gain, because as I said, I don't think that can be taken off exchange.
Got it. And on the first question, which is what do you see are the kind of short term and the very long term challenges apart from the obvious one, which is policy?
I think that I don't think that, well, I mean, I'm an entrepreneur, right? So by definition, I'm an optimist. But I don't see a problem in the carbon markets in the medium term. But, the big question is, when is that inflection point going to happen, right? Mm-hmm. We're seeing a lot of countries around the world have sort of said, we will pursue carbon markets as a way of mitigating carbon. It is the single most efficient way for a dollar to be put into a climate mitigating activity. There is no better way than using market forces in order to create an efficient market. So I don't believe that the carbon markets will disappear or that they're under threat. The only thing I believe is that the only thing I'm unsure of is how quickly will this market mature? Will it take another 5 years of us sort of banging around trying to find a common ground across different jurisdictions with standards for carbon credits so that people can buy and sell them very quickly, or will that happen within a year? Or again, the entrepreneur in me says I believe that that'll happen sooner rather than later, but I absolutely have no doubt that it will happen.
That answer overlaps with actually my next question, which was, the carbon markets growth in the next 10 to 20, 30 years, so to 2050. One remark I want to make, about 2 years ago, was helping somebody doing some financial analysis of a solar project in Vietnam. And once I finished everything, the person said, okay, well, great job, well done, but what about carbon? I go, what about carbon? And he goes, well, that should be like an integral part of the project. And then I kind of like went, this kind of bright light shone on my face and said, oh yeah, of course, it was so obvious. It's like when I was a financial analyst, you make a very obvious mistake. And I think that's where we're heading. We're heading that it's just part of the financing, and over the next few years, there's going to be a further integration. But where do you see the carbon markets, carbon trading, 20, 30 years from now? I mean, just like any other commodity. I mean, it's going to be like electricity trading or weather futures, or.
I think carbon at the end of the day is going to be a lot like a VAT. It's going to be part of every single interaction globally. And so in order for you to do a transaction, send a product from point A to point B, there will be an attached carbon tax to it. And because of that, the ultimate buyer of carbon credits, and I mentioned that earlier, today it's a sustainability officer using marketing dollars. The ultimate buyer is going to shift. It's going to move across the balance sheet from a marketing cost to just a carbon cost, right? And that carbon liability is going to be managed by the Treasury. We saw that during the first when the European emission trading scheme came out. And they mentioned within the European trading scheme that you could use CERs, the old carbon credits, to pay part of your European emission trading scheme tax, all of a sudden, the treasury side of every single one of those corporates was focused on getting the absolutely best priced carbon credits in order to mitigate that carbon. And we had a carbon market, and we had futures contracts on it, and things were sort of the beginnings of the beginnings. Then came the global financial crisis, and as I said at the beginning of our chat, political will just sort of evaporated, and no one had, carbon just went to zero. So I think that the future is one where carbon will be an integral part of every transaction, and because it's part of every transaction, it will be managed by the treasury operations of corporates, and so it will be like any other commodity. It'll just be ubiquitous. It'll be everywhere.
And I guess as part of this evolution over the next few years, we're going to see some kind of consolidation of carbon exchanges, or do you think there's going to be even more carbon exchanges?
No, I think that there will. I think there will be a couple of exchanges. It's sort of interesting, right? Because globally, you have ICE, you have EEX and Deutsche Börse, who are our partners. You have the sort of very, very big exchanges globally, and then you have large regional exchanges. I think that today, the reason those very large exchanges are not really in the carbon markets in any meaningful way is that at the end of the day, the carbon markets are a bit of a dog's breakfast. And so, these very large exchanges, they operate in markets that are very, very liquid, that allow for very rapid transactions and high volumes. Right. The carbon markets don't do that. And that is the barrier to entry that we enjoy today. Right. So that is the reason that there are carbon exchanges such as ACX. I think as the market sort of moves into a more sort of standardized trading ecosystem, there will be consolidation. So I think we're at that point where there were a lot of people going into carbon exchanges. Now that has basically peaked, and a lot of, only really 2 or 3 players are going in the direction of calling themselves and actually operating as an exchange. Because that's the other thing, in an unregulated commodity, you can call yourself an exchange. Exchange is not a regulated actual word. So there are a lot of marketplaces out there that are just, putting lists of carbon projects and calling themselves an exchange. That's really not what an exchange is, right? You have to be regulated. You have to, that's what in our minds, and we are, one of 2 that globally that fit the bill. That's where I see it going.
I know you've got to run to a meeting, so I'm going to ask two last questions, very, very brief. One is, what about China? Do you see it kind of being part of a bigger ecosystem or not? And then just some final thoughts and key takeaways.
Look, I think China is the largest carbon market that I'm not going to go into. It has a lot of very efficient and very, very efficient, very knowledgeable carbon people in China that are pursuing their transactions. There are, I believe, 11 different regional exchanges. There's clearly it's clearly going to be a massive carbon market. We've purposely decided to look elsewhere. It would take a significant amount of bandwidth from a startup. I think we're past a startup now. We're up to 43 people or so in the company, as I said, with operations globally. But it would have taken a huge amount of bandwidth to add that to the docket. So we're going to leave that to the people that know best, and hopefully we will connect with them through one of our exchanges. But we're not going to go into the China market. And in terms of sort of last thoughts, I mean, my feeling is that, we are moving into a carbon constrained world. I think that anybody sitting in a board today that is not looking at carbon, their future carbon liability, and climate change as a whole as a risk is actually being negligent. And so it is, and you're seeing, you're seeing companies pursue climate strategies faster and faster. And I think we're just at the beginning, and this market is going to explode.
Bill, I really want to thank you. Hope you're not going to be late for your meeting. It was a really interesting discussion because we talked about carbon and carbon exchange and from a variety of angles, especially the kind of case study of ACX, if I can put it this way. So, Bill, again, thank you very, very much for your time.
Thank you. It was a pleasure. It's always great speaking to you.
Thank you again. Thank you for listening. Please contact us for any thoughts on topics or comments. Contact details are in the show notes. The Asia Climate Finance podcast is presented for educational purposes only. All information in the podcast must not be construed as investment advice. Always consult a licensed professional before making investment decisions. The views and opinions expressed by our guests are personal and may not represent those of current or previous employers.